According to Governor Sedi, global inflation appeared to have peaked in the fourth quarter of 2022 and is expected to moderate, supported by declining energy and non-fuel commodity prices, as well as monetary policy tightening, adding that the IMF forecast global inflation to decelerate to 6.6% in 2023 from 8.8% in 2022.
The Food and Agriculture Organization, FAO, food price index declined for the 10th consecutive month in January 2023. The index declined by 0.8% from December 2022 to January 2023 and 17.9% below the peak in March 2022. The international prices of rice, on the other hand, continued to rise. The FAO Rice Price Index increased by 6.2% from December 2022 to January 2023, reflecting tighter supply amid strong demand and exchange rate movements.
On the domestic front, the central bank boss said the economic activities continues to strengthen, pushing the output gap in the positive territory. The Central Bank of the Gambia's Composite Index of Economic Activities, he adds, shows that public investment spending, recovery in tourism and related activities, and robust private remittances continue to support the economic growth momentum.
The findings of the latest private sector business sentiment survey points to improved sentiments as most respondents are upbeat about the medium-term growth prospects of the Gambian economy. Respondents also expect higher business activities in the first quarter of 2023, predicated on higher capital expenditure, consumer demand, and sales. However, inflation expectations remain elevated, and are expected to persist in the near term.
Governor Sedi also reveals that provisional data on government fiscal operations for 2022 shows an overall budget deficit of $6.4 billion relative to a deficit of $6.1 billion in 2021, attributed to a shortfall in revenues, adding that total revenue and grants declined by 3.8%, mainly attributed to a decline in revenue generated from international taxes and non-tax revenues.
The stock of government domestic debt increased in 2022, but at a decreasing rate. The nominal debt stock stood at $38.1 billion, representing an annual increase of 2.5%, lower than an average growth of 5.8% for the past 5 years. Moreover, domestic debt to GDP ratio declined from 34.7% in 2021 to 31.7% in 2022. The stock of Treasury bonds increased by 15.7% to $19.8 billion during the period under review.
The central bank boss said inflation remains elevated in 2022, driven by both demand pressures and supply shocks, as the latest data indicates a decline in headline inflation to 13.1% in January 2023 from 13.7% in December 2022, due to a decline in both food and non-food inflation.
Food inflation decreased by 0.8 percentage points to 17.5% in January 2023 from 18.3% in December 2022, attributed to the slowdown in the price indices of bread and cereals, sugars, and dairy products. Non-food inflation declined to 8.6% in January 2023 relative to 9.4% in December 2022, supported by the decline of all subcomponents during the period, except for housing, water, electricity, gas, and other fuels.
The committee has decided to increase the policy rate by 1.0 percentage point to 14%, maintain the required reserve at 13%, maintain the interest rate on the standing deposit facility at 3% and standing lending facility will increase to 15%. The next Monetary Policy Committee meeting is slated for Tuesday, 23rd May 2023. Reporting for GRTS News, I am Omar P. Jallo.